Okay, good morning everyone. We're starting out 2021. Looks like we're starting to get some selling pressure. I want to point out what I'm seeing in the charts. I've been talking about what I was expecting to see over the last couple weeks. And so looking for those sell signals. Looks like we're starting to get them this morning. Let's see if there's any follow through or if we can get any kind of closing price action. Again, the close is very important. You need to see, for a really good sell signal, you need to see a solid close. But let's get into these charts. Give me a thumbs up. We're going to start out here with the NASDAQ futures. So here's an uptrend line right here on the hourly. We've been kind of walking up this really since the beginning of November in tech. And this, we're starting to get the breakdown this morning below that trend line. And it looks impulsive. Let me show you what I noticed on the 1 minute candle. So here's the 1 minute candle of the triple Qs. I was watching it and I saw this candle right here. It just really came out of nowhere, just pretty impulsive. I looked at it and I actually got short the triple Qs when I saw that impulsive breakdown right there. Because you can see all these candles today were pretty small candles, and then randomly out of nowhere we got a big sell candle. So I took that short right there. So far so good. We'll see what the close looks like. And looking at the triple Qs, we also have the breakdown right there. So here's the trend line that I marked out. Here's a bearish rising wedge. You can see it really starts right about in there, but there's your bearish rising wedge right there. And so we were looking for some sort of a sell signal. Friday it broke down, Thursday broke down, but then they recovered it into the close. Today, you can see that's pretty impulsive, big red impulsive candle, and you want to, the more selling, the better. So, we'll probably flag out here a little bit and then maybe continue down. But as of right now, we do have a sell signal on the hourly chart. Going to the daily here, you'll want to see, this close down in this area. An impulsive close down here would mean that we have a sell signal. And again, big bearish rising wedge, negative divergence on the triple Qs right there. So if we get the solid daily close below this wedge, the breakdown of this wedge, that's a sell signal. And so I just want to point that out for anyone that's looking to take it. And I know the market feels like it can never go down. That's typically how the market always feels right before you have a major drop. Case in point, you'll notice back here in 2018, early 2020, the market was just grinding higher day in and day out. Little drops here, but not much, just constantly going up. I mean, that was a move up for, if you really want to start from the beginning, from October till February. So, many months worth of upward price action. Everybody felt bullish. And then, in 6 weeks, it pretty much gave all that back plus a lot more. So, again, that's how a market feels right before a big drop. Everyone gets long. There's no more shorts. And typically that's when the big downside moves come. So we'll go ahead and continue to watch this, see what kind of daily close we get. Without the daily close, and if they're able to pop it back up here and recover it, then it's not a confirmed sell signal. So I'd prefer to probably wait. I'm pretty nimble and I jump on things because I'm watching the charts as they trade out. But, if you're a little more conservative and you really want to wait for a confirming sell signal, you could wait for the daily close. It's just the beginning of what potentially could be a decent sized down move. And here's the SPY futures, ES. This is the uptrend line that this has been walking up for quite some time now. We had the little false breakdown during the holiday trading week, Christmas week, I believe. So again, that was just a whipsaw. But you're seeing, and then they ramped it up to the upside, and I pointed that out, that I thought it was likely that this move to the upside was going to be faded and sold into. And seeing pretty impulsive selling now. We're below that trend line. Let's see if we can get a close below there. Looking at the SPY, this also, here's your upward price channel in the SPY. False breakdown there on the holiday week. So that wasn't market consensus. But today we're seeing, an impulsive breakdown so far. So let's see if there's any continuation to this. And if we get continuation, then that's a sell signal on the SPY as well. Here's your daily chart starting to break down. So again, look for a daily close below this price channel, and that would be, that would be a sell signal. Where do we go? Well, I think we're likely to head back down to somewhere down around this 350 area. That would be a drop of about 5%. So I would look at that area as a kind of a first target, probably get a reaction in that area, and then we'll have to see what's on the chart at that point. IWM, so the small caps actually broke down. Let me go to the hourly. They broke down last week, and you can see here's your breakdown, and they were never able to recover that. Now the small caps had a pretty good bearish rising wedge, a pretty steep uptrend line there. Broke, a little kickback rally. Now we're continuing to break down. So this in general looks weak for the small caps, and I think the selling is actually just starting. So looking for this to continue, and we'll keep watching that. Let's look at volatility. So I'm long volatility. I've been building a position in volatility for a while, basically since we started kind of plateauing in this area. When we broke out right here, I took a position in volatility there, and then on these back tests here, I've added to my position. Volatility hasn't really been moving down, hasn't been moving up too much either, so it's just kind of sideways. Yeah, we're getting a nice little rip in volatility. It's up, this one's up 10% today. But we haven't broken out of the range. We haven't broken out of this range yet. So ideally, I'd like to see us kind of break out of this range. We do that. I'm looking at 1637 for UVXY for the first target. I've got 1872, and then I've got up here at about 24 bucks. Again, look at the bullish divergence in volatility right there on the hourly, and it shows up on the daily as well. You can see bullish divergence right there on the daily, while volatility has continued to make kind of marginal new low prices. The momentum has been moving up, indicating that we're about to see a volatility spike or increase in volatility. So again, this has been priced into the charts. We're just looking for follow through in the price action. Bonds continue to hang in there. So this morning, the TLT was down slightly. And let me go to the hourly here. You can see it was down. They came in and bid it up. So again, someone's buying bonds. As bad as the yields are, there's still someone's buying bonds out there. Obviously, we know the Fed's buying bonds, but it's likely that there's some other participants buying bonds as well. And you'll see here in the daily chart, we have big bullish divergence in the TLT. So that signals that we're likely to see a move up or a trend reversal, because right now the trend is down in bonds, and this is telling me that we're likely to see a trend reversal. So what I'd be waiting for is a break or a buy signal in bonds. Right now, we cut on the hourly chart here a couple tags right there. So you could see, yeah, I'd probably wait for a break above this 150, about 160. A clean close above 160 would probably be a good buy signal. And from there, I'd look for bonds to move up to about 170, or possibly higher, but at least 170 for the first target. Okay, let's take a look at gold. So I pointed out in my video yesterday that gold looks like it was, had a breakout and moving higher. And today I just see, further confirmation that that is the case. So as of right now, gold's on a breakout. Looks like a buy to me. We didn't have any divergence. There was no bullish or bearish divergence. You can see right here, bullish price or bullish momentum right there, bullish price action. So there's no divergence, but that's okay. You don't always have to have divergence for prices to move higher. The point is, we had a false breakout right there. That was that brought us down to the 1790 level. That was my target. Really, that was my major support target for gold the entire time. Where did that come from? Well, if you look at the weekly and you roll all the way back to the last bull market, that was the kind of resistance line right there at 1790. Tagged it 3 times, once, twice, and 3 times. This right here was just an overshoot where it was just ripping higher and just kind of overshooting based on you know, the momentum that this thing had to the upside. But once it settled in, you had a nice refined resistance level right there at 1790. Again, we had pretty strong momentum breaking out. That's definitely a breakout above 1790. Pretty strong momentum, came back down, tag it, back test it, and off to the races. So in general, looks bullish as of right now. Now it's had a nice run today. It's up, you know, 43 bucks, so we could easily get a little bit of a pullback. But in general, looks like this thing's starting to trend to the upside. You'll see Barrick Gold here breaking out, you know, up 8% today. So again, I pointed out Barrick Gold. I was buying Barrick Gold when we put in the bullish divergence. Right, if I remember right, I think I was buying it right in here, right in this area right there. I believe I bought some right in here. I've been buying it all along this support line basically, and today breaking out to the upside. So really from the initial entry when I talked about how I was getting back into Barrick Gold, we're up about, you know, 10% or so, 9.5%. So Barrick looks bullish. Obviously this is a daily chart here, so look for the daily close. You want to see a daily close above this 2420, and that looks good. Like we're, you know, gonna start potentially the next leg higher in gold. That's what this looks like. Let's take a look at the dollar real quick before we move on. The dollar here is moving higher. Nothing, you know, we're not breaking any kind of trends or anything. There's no signals that we're kind of getting out of the price action today, but we're just seeing a move higher in the dollar. Again, when you look at the dollar though on the daily, I see bullish divergence here. I see some divergence where we're moving higher here, and recently we had some more bullish divergence, kind of a smaller time frame divergence. That probably shows up on the hourly there. Let's look at the hourly. Yeah, it does. It's not I can redraw that line, but basically the new low that we just made recently was a divergent low, and this morning actually, and then the buyers have been stepping in. So the buyers are buying these divergent lows. Every time we've hit a new low and it's been a divergent low, the buyers are stepping in. What would I look for in the dollar? Well, you know, we have this bullish falling wedge. I would look for some sort of an impulsive break above this 91 area. But I could see this divergence is telling me that we're likely going to move up to this trend line here around 91.80 or 91, depending on when we actually get there. And from there, if you get a breakout or a break higher, then, you know, then we're likely to run up to about this 96.40. 96.40 or right in that area, that comes from the longer term support line. Coming back to 2011, you can see all the reactions that we had. We recently broke down, but we haven't done a full back test yet. So to run up and do a full back test is completely possible. And the chart showing me the bullish divergence tells me we're at least going to get a move up to this 91 and potentially, you know, a breakout. We got to wait for the breakout on that. Okay, let's just jump right into where the pain is this morning, because lots of trades that I have are actually working, but this one's not as of yet. But here's the thing, I'm not worried about it because technically I still have the trade setup that I'm looking for. So here's the thing on NEO. We, they reported something good and they're up about 11%. But the thing is that they still have negative divergence on the daily. You see it right there. So there's the negative divergence. Now, if this wants to continue to run, it could obviously burn through the divergence, but it hasn't done it yet. So what I could see is we run up, pop above this 97 area just briefly. We're almost there, so I think probably might even get there today. Make a slight pop above it, keep the negative divergence intact, and then start to roll over. So again, while that negative divergence is there, I still like it. I still think it's going to sell off, and I'm still holding my short. And the way I handle these, NEO, I know NEO's a runner. I know it can run a lot. Obviously, it's up almost 11% today in one day. That's a pretty big move for a stock, and NEO can do that. So the way I manage the risk on the ones that can move quite a bit is I take smaller position sizing. So NEO, I don't have nearly this, the same size position that I would have maybe on triple Qs or Barrett Gold or something that's not going to move quite as much. I would have a larger position size. NEO is a momentum stock. These high-flying momentum stocks, I never start with a large position. I start small, and I can add to it when it continues to work in my favor. But if it's not working in my favor, I don't add to it, and then I'll just stop out. But again, smaller position size will keep you in a trade, can keep you from feeling emotionally frustrated. That's just a technique, or that's something I learned, that when you have a smaller size, you can give it some room and it doesn't affect you as much. So NEO still has negative divergence. I'm still looking for us to come down to this trend line here and probably break this trend line. But again, down to this trend line around $40, somewhere right around there, and then we'll see what happens. Okay, and then Tesla. I'm still short Tesla, and yeah, it's going against me, but as expected. I mean, the thing is, the momentum is straight up in Tesla, so obviously, you don't know. It's a very low probability that you're going to short something that's going straight up right at the very top. All right. However, these momentum names, the momentum can shift very quickly, and what I see is that that's actually happening underneath the kind of behind the scenes. You'll see here on the daily chart negative divergence, and that nothing's changed. Even with today's move of up 3-4%, we're continuing to just have that negative divergence intact. If you look at the hourly chart, they popped it up to this resistance line, but again, it looks like they're fading it. I think it's likely that this was just kind of an overshoot and it's actually going to fade. This is going to hold as resistance. That shows up a little cleaner on the daily chart as I zoom in. I think we hold right in here at resistance and start to move down. Again, need to see that downward price action, but it looks good. And if you look at the PPO, looks like it's poised for a bullish crossover, but it hasn't made that crossover yet. So we're at resistance. We have negative divergence. We haven't made a bullish crossover. In general, I still think that this is an objective area to short, and that's what I'm looking for, is for this to continue lower. Okay, GM, I'm short this one. I've talked about it, and it's just been drifting sideways for many days, so I haven't been covering it that actively. But again, I'm just holding this short, looking for this to drift down to the trend line, down around 37 or 38, depending on when it gets there. And that's this lower trend line that was created back in March. And I'm looking for a drift down there. We're continuing to move down there, down 2.5% today. And so the drift continues to look good to me. I think we head down that way still. And here's FedEx down another 2%. So continued weakness showing up in FedEx. And I don't see any real reason why this is going to, why this wouldn't just continue lower. We've got a big gap down here at this 183, and it looks like that's where it wants to head. This is a thin zone all through here. Basically, from where we're at now down to that 183 is what you'd call a thin zone, because we've barely, if you roll back here, we've barely had any trading in that level since about back here in 2018. So this is an area where I think it's very likely that once we start to enter this area, we're going to sell off relatively quickly down to what looks like some more major support. We also have the 200-day moving average. That's this blue line. You see that's kind of moving up. So you might get a reaction at that as well. Here's Zillow. Continues to work for the from the short side. Down another 1.5%. So what I liked about this and why I was short, just for anyone who hasn't been following along on this trade, you had this bullish, or you had this trend line right here, and Zillow was just continuing to move higher. Broke trend right here. There's a break in trend, but no negative divergence at that point on the break of trend. And so then when they did a back test right up into here, made a new marginal high above this previous high. So there's your marginal high right there. And if you look at the momentum, you had negative divergence. So at that point in time, the negative divergence looked something like that, but it was there. We did another back test right there, and that just extended the negative divergence to right there. And I didn't notice this one until, just luck of the draw basically, but this is when I saw it was right here. So I got short this thing on the back test right there at 143.33. Just caught that one kind of perfectly. It traded above me a little bit, went a little underwater, but all within acceptable ranges of risk. And now we're selling off. So just looking for this selling pressure to accelerate. But as of right now, it's going in the right direction. Qualcomm here working its way up this upward price channel. This is a daily chart, so it goes back to March. And as I zoom into kind of the price action today, it looks like it's trying to break. So maybe you get a sell signal on Qualcomm. Again, you want to see it impulsive though, not just this little marginal breakdown. If I go to the hourly here, you can see it's just barely broken down, but there's buyers in there buying it, and that's why it's not impulsively breaking down. So if you get some sort of impulsive sell-off, that would be a sell signal in Qualcomm. And you've got a big gap right here. So the obvious target would be a gap fill down around 130. So that's what I see in that one. Intel, they're trying to keep this thing above support. They don't, they're going to keep us guessing. I think we're in the area where it's going to be pretty choppy. So what I actually exited my trade last week on this. I was profitable, and I liked the profit that I had made on it pretty quickly. So I took some off, and I'm looking for a more definitive breakdown right now because here's the thing about Intel. We broke down. This is your bull market price channel in Intel going back to 2009. So there's your 2009 low. This is a weekly chart, so it's going all the way back to 2009. And you work, and this is what we got going on recently. So we broke that support line right here, recovered it, broke down, trying to recover it. So it's a chop zone right now. It's going to be whippy. So I'm looking for a more sustained, definitive breakdown on this thing before I can really say that, okay, this is starting a new bear market. Because if they recover it again, it's just going to continue to kind of chop people up on the, chop people, whip people around, and the bulls and the bears are going to lose money. So I'm just going to sit on the sidelines and see what this thing wants to do. Carvana down another 2% today. So again, the trading, my trading style gets you into trades. It doesn't, you're not profitable right off the bat. And again, especially when you're shorting, stocks go up, 8, 9 days out of 10. 80% of the time stocks are moving higher, and 20% of the time they're moving lower. That doesn't necessarily mean that that going long is the way, the best way to make money, because, a stock might move up 8 out of 10 days, maybe just a little bit, and then when it sells off a lot. So again, just because something moves up a lot, it kind of lulls you to sleep when you get that grinding lift action where you think, oh, everything's going up, there's no worries. It always wants to go up every day, day in and day out. And then randomly you wake up and there's a big sell-off and you're kind of caught off guard. That's how the downside works. Typically it catches the bulls off guard. They don't realize that it's coming because they've been sedated with price gains over a longer period of time. Carvana here, you can see continuing lower. So what did I like in Carvana? Well, Carvana had negative divergence on the daily right there. That really started to show up. I mean, it's been there for a while. It's a good size negative divergence. This is a divergent high. This is a divergent high. And all this price action right here is divergent high price action as well. So we've got clean, pretty extended negative divergence on the PPO on the daily. We've got a bearish crossover right there. And we have a bearish rising wedge pattern that is not fully mature yet, but you don't have to get all the way to the apex, which would look something like if we were trading all the way in here. You don't have to get there. So again, I think this breaks down. But what I'm looking for the next kind of major sell signal, so I think we head down to this trend line right here, likely get a bounce there or some sort of reaction, and then the next impulsive sell signal would be a break of this trend line. NVDA, a little bit of a pop today, but they sold that. It's just sideways. NVIDIA is doing nothing, kind of dead money. Big negative divergence. Here's the thing. I could see NVIDIA running up and making a new marginal high because this negative divergence is so extended and we haven't had any downward price action. I could see us running up, making a new high, keeping the negative divergence intact. So maybe running up and the RSI moving up like that while we make a new high. I could see that. So I might just get out of this thing because it's for me right now, it's just sideways money. I'm just at break even and see if I can get, maybe short this thing at a little bit, on a new marginal high, marginal new high. So I'm probably going to do that. Peloton, again, this one worked out really nicely so far. You can see here on Peloton, well, basically on the daily here, upward channel and all the way from March. We broke trendline support right there on November 9th, but no negative divergence on the RSI. So I was looking for that negative divergence and it cleanly started to move higher and then here started to ramp higher and then we got the gap up. And on this gap up right here, the day that it gapped up, it actually put in negative divergence. So it made a new marginal high right in here, while a lower momentum peak right there. So you can see how that's lower. And that was your negative divergence. And also it was gapping up pretty much right to resistance. So, gapping into resistance, making negative divergence. That was in a very clean objective area to enter a short position. And that's where I entered, was right here. At 159, about 160 basically. So far from that entry, it's up about, or I guess it's down about 7%. And we got a gap fill right down here, so maybe we get a little reaction. But I think this thing has a lot lower to go over time. Swing trades take time. They don't just play out. You don't just see sell-off. We're not going to get a COVID drop of 35% instantly. I think when we go lower, I believe that we're likely to kind of work our way lower moderately at a moderate pace, and then the selling will increase. After we've worked our way down quite a bit, the selling will start to increase. Someone asked me to do SolarWinds SWI. I don't see anything bullish in this right now at first glance. So this is your March lows. This was your uptrend channel right here. And yeah, it was right about there basically. And so it was, the trend is your friend basically. And so everyone was riding the trend, everyone felt good. Right here everything looked good, no reason to get out. And then you wake up to a big gap down and they smash it down hard the next day. And that one day you can see just wiped out all these gains going back many months basically. And that's how that works typically. On these momentum trades, everything's good until you wake up and you realize you're the bag holder. So usually what I like to do, and if we can try to see what I would like to do on these momentum trades, that when I start to see negative divergence, one, I don't add to a long position. I don't continue to buy the dips. And two, I do think about taking profit as well. This one, negative divergence really showed up right there. Started to get it right. That's a divergent high. That's a divergent high. So all these are divergent highs. So that is where it started to show up, broke trend. Now it's just been impulsively to the downside, pretty oversold, obviously. But I don't see any bullish divergence yet. So what I would look for is kind of a new marginal low in price, maybe down to here. And then look for bullish divergence to start to show up where you can make a case that you're going to start to build or get some sort of a reversal or move up. We don't have bullish divergence on the daily because you haven't made a new low. The price is still You've got downward momentum, downward price. You haven't made a new low with upward momentum yet. And if you look at the hourly here, yeah, no, there's no bullish divergence either. You can see we're just basically had a little bit of a, here's bullish momentum here, and the price action was bullish as well. So you made new higher highs. What you'd want to see is this to come down and make a new lower low. I think it's going to do it soon, but make a new lower low below this 14 buck area and put in a higher low on the momentum, setting up for bullish divergence, and that'll start to build the case. And then what I would look for is a break of this downtrend line, which is, I don't know, maybe it's not the cleanest, but maybe something like that. You have to kind of, yeah, I don't like to force these things, but something like that. You need some more data to find that trend line. But a buy signal would be an impulsive break above a downward trend line. Just to wrap up, someone mentioned that my trend line is different than a lot of other guys on YouTube, and I realize that. I know a lot of what I've seen a lot of guys been doing is they're making like this megaphone pattern that looks kind of like this, something like, if I can get this to go, something like that, and then they've got the bottom down here like that, and this is kind of the megaphone pattern that they're making. And this is, it's valid. You can say that's a trend line, but regardless, you can see that we're just grinding and chopping around, barely breaking out. Yeah, you get the little whipsaws where it looks like it wants to break out, but again, no breakout. The reason why I like this other trend line though, and I don't use that one, is that this megaphone pattern only goes back to 2018. And so you've got, that much data. My trend line, I've got reactions coming back all the way to 2009. And so, I've got reactions back here in 2016, several weekly reactions around this time frame. I've got more here. And then when we broke, I've got some tags of resistance right there, and then another tag of resistance right there. So the more data points that you have, the more valid a trend line. So that's why I prefer this trend line, because there's more reactions than just this megaphone pattern right there. So I like it. I'm going to leave it. And that's all I got for you guys. I will catch you guys on the next one.